Look guys, we need to have a talk. Right now, the Utah real estate market is a bit crazy. Prices have jumped up significantly, and in fact, over the past 6 months, we've seen over 12% appreciation among homes across the Wasatch Front. There were a lot of factors that came together kind of just in this perfect storm that caused these prices to go up so significantly over just the past 6 months here into 2021. This has a lot of people thinking that we might be in a euphoric bubble and perhaps maybe now isn't the best time to buy. We're going to talk about everything you need to know here about why we're in this situation in the first place, what you can do about it, what my thoughts are on the market, and whether or not it is a good decision for you to purchase if you're moving here to Salt Lake City, or maybe you already live here in the area, right? If you're thinking about buying real estate here in Utah, we're going to talk about those things that you need to know before you make this decision, and I'm also going to give you my perspective on this whole situation. So with that said, let's jump right into it. So a lot of people think that we could be in this euphoric bubble, and if that bubble does end up getting popped, it could send us into a free fall of dropping prices. And in a normal situation, I would agree. You know, when you look at other asset classes such as the stock market or bonds or anything like that, you can see these bubbles, and when they pop, the prices do drop very rapidly. The thing I have to say about this though is that with real estate, even if the value of your home drops, that doesn't necessarily mean that you lost money, right? Nobody's coming to force you to sell your home. You're the one that's making a decision to sell your home, so long as you're not like in a foreclosure or a short sale position, right? So as long as you're not in a position where you have to sell the home, you don't actually have to take that loss on the real estate prices. Now, if you're not already in the market, that could be a good thing for you because now you can take advantage of lower prices. But if you're already in the market, it may or may not affect you. It's really only going to affect you if you actually go to sell your property. You see, real estate is not as liquid as these other investment classes. If you own shares of a company and you want to sell those shares of stock, you can basically log on to your online brokerage account, click the sell button, and away you go. You've sold out of that company, you get your money, and you move on. However, real estate's not that easy. You've got a lot of people with their hands in the pot, and it does traditionally have a 30 to 60 day window before the property can actually be bought or sold. You've got a lot of people like buyers, sellers, bankers, title companies, real estate agents, inspectors, appraisers, all these different people with their hand in the pot who have a say in how this transaction moves forward. So this is going to be one of those things where you have a lot of moving parts and it doesn't move as quickly as these other asset classes. In the long run, this is actually a good thing because it gives you a little bit more stability with real estate. It gives you a little bit more certainty to know that you can wait out the market for it either to go up or to go down, or you can get a better view of where the economy is going and the real estate market for that local area. This does mean that it's much slower to gain prices, but it's also much slower to lose those prices as well. Now, there are a few things that I want to talk about here that kind of gave us that perfect storm as we went into the end of 2020 that really caused price appreciation over just the past 6 months. First, we've always had a supply and demand issue here in Salt Lake City and along the Wasatch Front. We've got high levels of demand, but not enough supply in the market. We're not seeing as much supply in the market for a few different reasons. Number one, it's because people are not moving because of the pandemic that we had. People don't want other people walking through their home, looking at it and looking at buying. Number two, we've also seen a decrease in supply because people don't necessarily have somewhere to move, right? Most people who are going to be selling a home in this market need another home to upgrade or downgrade into. So if that home does not exist because the builders can't build it, or possibly that other person hasn't listed their home for sale, that very first person is unable to sell their home and is not going to list it on the market. And that other thing that I just mentioned about builders not being able to build it, well, there are a lot of restrictions. Cities are not issuing permits as quickly as they were just because they don't want the density or the construction to happen as much, or they have hard times getting it approved by all the city residents, or it could even be because the city is just backed up because of the pandemic. Everybody's working from home, so things are just moving much slower than we normally see. In addition to that, some builders are also slowing down their production because the cost of construction has gone up so significantly that they need to have these prices come back down to a more realistic level to be able to go in and build the home and still be able to make a profit. Right now, unfortunately, a lot of those builders are kind of pushing on some of those costs over to the end buyer, and that's pushing up prices even further. So until we see that the supply and the demand meet in the middle and they're equal, we're not going to see a decrease in prices. As long as there's always a little bit more demand than there is supply, we're going to see those prices continue to increase. This is just basic economic theory that says when people want to buy, prices are generally going to go up, and when people don't want to buy, or when more people want to sell, then prices will go down. This is how this is going to work for the real estate market as just a general overview. The second thing I want to talk about is interest rates. Interest rates fell significantly as we went into the pandemic, and going into the end of 2020, they continued to drop. Now, at the time of this recording, they have creeped back up, but we did see such a significant drop in August, September, October, November of last year that a a lot of people jumped in, they refinanced, or they went out and purchased a home because they were able to get approved for more because of that decrease in the interest rate. I saw interest rates as low as 2.5% on conventional loans, which is just extremely low. Anything under 3% is just like mind-blowingly good for a 30-year term. Now, right now, we are seeing interest rates in that 3 to 3.5% range for conventional, which is still really, really good, right? And as we saw those interest rates come down to that 2.5 to 3% range, we did see more people jump into the market because they figured, hey, I can get a loan at such cheap rates. Now is the time to go out there and make a purchase. A lot of people went into forbearance and they were able to delay making their payments to get back on their feet. This means that a lot of people had the option to delay making payments rather than having to sell because they ended up in a bad spot. And this again lowered the supply that was in the market. Now, as we go forward, you might be looking at all of these things and say, okay, well, when all of these things flip and we are on the other side of it, that's when this bubble is going to pop, right? When interest rates go up and foreclosures happen and the eviction moratorium is over and forbearance is over and the supply finally meets the demand, we're going to see a pop, right? Well, I don't know. I mean, guys, right now, from what I'm seeing, I've got a few opinions on that I want to share with you. Right now, I want to start with foreclosures and the eviction moratorium and forbearance. This is such a small portion of the market that even when these things happen, I don't think that we're going to see a huge flood of supply into the market with all of these listings coming because people, have finally evicted their tenants and they need to list the property, or they go into foreclosure because they're not able to make that payment. Most people right now have so much equity in their property that if they got into one of those spots, they would just sell the property and be okay. So I don't expect that we're going to see a lot of foreclosures. I don't expect that we're going to see a lot of eviction properties or rental properties that come onto the market because landlords will just fill that property with another tenant, right? Or they're going to be in a position where hopefully they're able to go back to work, start making money again, and be able to catch up on their payments. Because of all this, I see this being a very small subset of the population on which this will actually happen to. So I would say, from my personal opinion, probably 2 to 5% of the population will end up in this spot. And with those additional homes coming to the market, that will help slow down the appreciation, but I don't think it's going to cause us to go into a foreclosure crisis or an eviction crisis. Now, next up, I want to talk about interest rates. Interest rates, yes, they have creeped up to that 3 to 3.5% range. They are a little bit higher than they were 6 months ago, but they're still not high enough to really make an impact in this market. So again, I think for this, we're not going to see 4%, 4.5%, 5% interest rates anytime soon, and this is not going to make a huge impact on the housing market overall. The majority of people who are purchasing homes right now are very well qualified. They've got great credit, great income, low debt, and they're able to qualify for this loan. Whether their interest rate is 3% or 3.5% doesn't make too much of a difference for most of these individuals. So again, I don't see the interest rate really making a huge impact on the market here in Utah. And then again, going back to that very first point I made about supply and demand, right now there is so much demand for homes here in the market. There's a lot of people moving to the state. There's a lot of people who already live here who want to get into the market, and that is causing so much demand. Unfortunately, the supply is just not there. I think that we could see the supply almost double and we would still not have enough supply to meet all of the demand that's out there. So again, until either the demand drops or the supply exceeds that demand, I don't think this is going to be a big enough factor to really affect the market. At the most, I think that we'll probably see the market come out and maybe level off, and maybe we won't see any appreciation, but we also won't see any depreciation in those home prices. And I think worst case, we might see a 5 to 10% decrease here in the Utah market. Now look, guys, with all that being said, I obviously don't have a crystal ball. If I did, I would tell you guys, right? I would just bring that out and just say, hey, look, here's my crystal ball. Here's what I know. Here's what you need to do, right? But unfortunately, I don't. So, I mean, to be honest, here in this market, I do think that we'll continue to see prices go up. Maybe not as quickly as they have over the past 6 to 12 months, but I do think that we'll continue to see appreciation for at least the next 12 to 18 months. Now, going beyond that, it's a little bit hard to predict because there's just so many things that could change. Who knows? Maybe we have another pandemic, or we have World War III, or something like that, right? So who knows what's going to happen? But as far as what's happening here in Utah, I think that we're going to continue to see those prices go up. I think that there's a chance in other markets, that in California or New York or some of these other areas where you've got major cities, I would not be surprised to see those cities end up in a crash or in a period where they're actually seeing prices decrease. I know that rents in San Francisco and in New York have dropped pretty significantly over the last 12 months. So I wouldn't be surprised to see this, but here in Utah, I just don't really see that being a thing. Now, I could be wrong, guys, but this is just my own particular opinion on what's going on in the real estate market. This opinion comes from me being in the business every single day and seeing what people are buying and selling and what they're actually saying about where the market's at. This also comes from me being a real estate investor and owning multiple properties here along the Wasatch Front. All right, so with all of that being said, what do you do, right? Where do we go from here? Well, I think you have to look at real estate as a long-term investment. You have have to really look at real estate and say, look, this is something that I plan to be in for the long run. This is something that I want to own for at least the next 10 to 15 years. And if you look at it that way, I think that you're going to come out okay. I think that in the long run, Utah has a very strong proposition to continue increasing in prices. If you look over the next 10, 15, 20 years, I do have about 98% certainty that the Utah real estate market prices will be higher then than they are today. I think in the future, you could be looking back and say, man, I'm really glad I bought in 2021 and took advantage of those low interest rates. Or you might be saying, hey, I really wish I had just gotten in the market sooner. Like I said, I do think that you should look at this from a long-term perspective. As long as you don't put yourself into a position where you need to sell should the market actually drop, then honestly, you should probably be okay. You know, keep a savings account, keep money in the bank so you can make those payments every time, even if you lose your job or if something happens, and I think you're gonna be okay. If you can keep yourself in a position where you can hold on to the property rather than being forced to sell it, you should come out into a position where you're okay, even if you have to hold on to the property for an extra 2, 3, 4 years as a rental property until you are above water and can finally sell it for a profit again. Regardless of the market that we're in, whether prices are up or they're down or interest rates are up or they're down, I always think that you should look at real estate from this perspective. Try to never put yourself in a situation where you have to sell, and in the long run, you're going to do okay. And you can still take advantage of these extremely low interest rates that we're seeing right now. When you take into account the inflation that we expect to see in the future, this is almost like free money. So honestly, it's probably a pretty good idea to take out that leverage and get that loan. So with all that being said, guys, I want to take it right back to the beginning. Look, the Utah market is kind of crazy right now. Prices are at an all-time high, but depending on how you look at it, it might still be the right time to buy. I'm not going to make that decision for you because everybody's situation is a little bit different. However, if all of this information makes sense to you and you still decide that it's the time to buy, make sure to get in touch with me. Whether you live here already or you're thinking about moving here to Utah, get in touch with me. My information is here on the screen. Reach out to me. I absolutely love it when you guys call me, text me, or email me. I can't wait to hear where you're coming from and hear about your adventure about moving here to Utah. So with that said, guys, my contact info is here on the screen. Give me a thumbs up on the video. Don't forget to subscribe to the channel to learn more about what it's like to work, eat, sleep, live, and play here along the Wasatch Front. And with all that said, I'll catch you guys in the next video.